Which crypto strategy is better for you, staking or trading on Kraken? Are you looking for passive income, or are you chasing explosive gains? The world of cryptocurrency offers incredible opportunities, but navigating them requires understanding your goals and risk tolerance. Today, we're diving deep into two of the most popular ways to grow your crypto portfolio on Kraken, staking and trading. We'll break down the mechanics, explore the pros and cons, discuss the risks, and ultimately help you decide which path aligns best with your financial aspirations. Let's start by setting the stage. The cryptocurrency market is a dynamic beast, known for its rapid price swings and constant evolution. For some, this volatility is a source of anxiety, but for others, it's a playground of potential. Kraken, as one of the oldest and most respected crypto exchanges, provides a robust platform for both active participants and those who prefer a more hands-off approach. This isn't about telling you what to do, but rather empowering you with the knowledge to make an informed decision for yourself. First up, let's talk about staking. What exactly is staking? Imagine a traditional bank account where you earn interest for holding your money. Staking in crypto is conceptually similar, but instead of a bank, you're contributing to the security and operations of a blockchain network. Many modern cryptocurrencies operate on a proof-of-stake (POS) consensus mechanism. Instead of energy-intensive mining, POS networks rely on participants to stake their coins as collateral to validate transactions and secure the network. In return for locking up their assets, stackers earn rewards, typically in the form of additional coins. On Kraken, staking is designed to be user-friendly, offering both bonded and flexible staking options. Flexible staking allows you to stake and unstake your assets at any time, providing greater liquidity. However, this often comes with slightly lower rewards. Bonded staking, on the other hand, requires you to lock up your assets for a specific period, which generally yields higher rewards but less liquidity. This lockup period can range from a few days to several weeks, or even months, depending on the asset. Kraken simplifies this process, automatically handling the complexities of node operation and reward distribution. They even offer an auto-earn feature, which automatically puts eligible idle assets into flexible staking. Rewards are typically paid out weekly, accruing directly into your Kraken account. So, what are the advantages of staking on Kraken? Firstly, passive income. This is perhaps the biggest draw. Once your assets are staked, you earn rewards without needing to actively monitor markets or execute trades. It's a truly hands-off way to grow your crypto holdings. For long-term holders, especially those who believe in the fundamental value of their chosen cryptocurrency, staking offers a way to compound their gains. You're essentially being rewarded for simply holding an asset you already intend to keep. Secondly, lower risk compared to active trading. While no investment is entirely risk-free, staking is generally considered less risky than trading. You're not trying to time the market, predict price movements, or react to sudden volatility. Your returns are based on the network's consensus mechanism and the agreed-upon reward rates, which are often more predictable than market fluctuations. It provides a more stable and consistent income stream. Thirdly, contributing to network security. By staking, you're actively participating in the decentralization and security of the blockchain network. This can be a fulfilling aspect for those who believe in the technology and its long-term potential. The more tokens staked, the more secure and resilient the network becomes. And finally, simplicity and accessibility. Kraken makes staking incredibly easy. You don't need technical expertise to run your own validator node, which can be complex and expensive. Kraken handles all the technical heavy lifting, allowing you to participate with just a few clicks. This accessibility opens up passive income opportunities to a wider range of investors. However, staking isn't without its disadvantages and risks. The primary one is liquidity constraints, particularly with bonded staking. Your funds are locked for a period, meaning you cannot access them immediately if you need to. This can be a significant drawback if you anticipate needing to sell your assets quickly due to market changes or personal financial needs. Even with flexible staking, while you can unstake at any time, the rewards might be lower. Another consideration is price volatility of the staked asset. While staking rewards are predictable in terms of percentage, the value of the underlying cryptocurrency can still fluctuate. If the price of the asset you've staked drops significantly, your overall portfolio value could decrease, potentially offsetting the staking rewards. This is a crucial point to remember. Staking doesn't protect you from market downturns. There's also the risk of slashing. While rare on reputable platforms like Kraken, some POS networks have mechanisms where validators can be penalized, slashed, for misbehavior, such as going offline or attempting malicious attacks. This could result in a portion of your staked assets being forfeited. Kraken generally takes measures to mitigate this risk, but it's an inherent part of the POS mechanism. Finally, opportunity cost. While your assets are staked, they can't be used for other purposes, such as trading or participating in DeFi protocols that might offer higher, albeit riskier, returns. You're committing your capital to a specific strategy. Now, let's shift our focus to trading. Trading on Kraken involves actively buying and selling cryptocurrencies with the aim of profiting from price fluctuations. This can range from short-term day trading, where you make multiple trades within a single day, to longer-term swing trading, where you hold assets for days or weeks to capture larger price movements. Kraken offers a comprehensive suite of trading tools, including spot trading, margin trading, and even futures trading for advanced users. Their platform, Kraken Pro, provides advanced charting tools, order types, and a low-fee structure for higher volume traders. What are the advantages of trading on Kraken? The most significant advantage is potential for high profits. If you have a solid trading strategy, market knowledge, and good timing, trading can yield substantial returns in a relatively short period. The high volatility of the crypto market, which can be a risk for stackers, becomes an opportunity for traders. You can capitalize on both upward and downward price movements. With that said, thanks for watching, and until next time.